Hi, I'm Andy Webb from BeCleverWithYourCash.com. This is the podcast to help you make the most of your money. In episode 439, we'll be looking at some of the big money stories from the last 7 days, including, is Black Friday a con or can you find a bargain? Energy prices are up again, plus should you consider an 18-month fixed mortgage? All of that and more, plus the deals of the week, including a £100 savings bonus, boosted cashback and much more, as well as some early Black Friday deals. That's all in episode 439 of Cash Chats. So we have a special guest in today's episode. It is Rob Lilley-Jones, a consumer expert from Which magazine. Rob, thank you so much for joining us.
It's brilliant to be here. Thank you for having me.
It's because Flip, we first sort of met years and years ago, didn't we, on BBC Berkshire, when you were a producer and I was a guest on one of the shows there. So we kind of turned it around. Now you're the guest for me.
Yeah, it's like you say, we've kind of reversed roles, haven't we, from when we first came across each other? But no, it's lovely to be here. You're still doing some great work, and I'm doing my best to protect consumers. So yeah, we're doing what we can, aren't we?
Absolutely. And it's perfect to have you along today because we've actually got a couple of stories which have done some investigating. So really, really good insights for us there. And let's kick off with one of those actually, because Black Friday is finally here. It does feel like it's been going on it definitely has been going on for the whole month in lots of cases. Sometimes, I think at the end of October, some places were already talking about it. But the actual big day of the sale is here. And Which have done some analysis of the deals to help us find out just how genuine they are.
Yeah, I mean, obviously it goes without saying, doesn't it? And you've mentioned it there. Black Friday now, it's not just a day. It feels like it's, well, I was going to say a fortnight. So basically for our investigation, we've looked at what we call Black Friday fortnight, but it does also feel longer than that, doesn't it? It feels like it's months going on, basically, doesn't it? But once Halloween's out the way, everyone seems to be focused on Black Friday and then Christmas. But yeah, it's really interesting. So we've done this investigation for the last few years where we look at the price that products are sold for on Black Friday itself, and then also look at the price that product was sold for the 6 months before and the 6 months after Black Friday. So tracking the history of those prices. And what we found this year, and I think these are the most shocking findings we've ever had. So we found this year that 92% of all of the products being sold on Black Friday fortnight last year were either cheaper or the same price at a different time of year. I mean, Andy, I don't know if you're surprised by that, but they're still shocking, aren't they?
Yeah, I mean, it really is shocking. Black Friday has changed so much over the years. I do find that more and more now that these promos, these offers that we're seeing, it's just about the hype. It's just trying to get you in. I'm not saying you can't find good deals. You absolutely can find some really, really good savings there if there's something you need and something you want to go for. But the illusion around the size of the discount, and the illusion that this is the time of year you're going to get it cheaper than any other time. Yeah, this evidence just shows you that it really isn't the case.
Yeah, I mean, exactly what you said there. If you want to go out and buy a specific product because you know you need a specific thing right now, then yeah, maybe that is the time to make the most of Black Friday. But I mean, some of the examples we found, there was a crazy one for a TV. So this is one of these big 43 4K, like 43-inch 4K TVs with Amazon Alexa built in, sold at one of the big retailers. And basically, they'd said it was discounted from, I think it was £449 down to about £249. So it's like £200 cheaper, obviously, on Black Friday, roughly. And then actually we found that if you'd have just waited a couple of weeks later, they knocked another £20 off. So actually Black Friday wasn't the best time to get that product. And there's another example where actually one of the high street stores, they were selling a hairdryer. On Black Friday, they said the hairdryer was, I think, £18.99. Before that, I think it was about 50 quid. But then actually we looked at it and it had never been £50. That was an outright lie. So yeah, there's some really bad stuff happening out there.
Yeah, I mean, that to have never been on sale at that price in the previous 12 months is really, really shocking. It should, I mean, I think it, even if it's been on sale at that price once in the last 12 months, is pretty bad. But more than a year since it was that higher price is really disgusting. And I see this all the time as well. The one that always gets my goat are the electric toothbrushes. And it's Boots. I'm going to name it as Boots. Big high street retailer. Always make a big thing of these electric toothbrushes being more than half price off. You know, biggest discounts. And there's one right now where was 275 quid, now 125 quid. So you see it and you think, wow, 150 quid saved. That is amazing. What a big discount I'm going to get. But then when you look at the price history, you see that they've been selling it for 150 quid for more than half of the year. And if you shopped around to other retailers, it was 150 quid for 3/4 of the last 12 months. So yeah, 125 quid is a low price. It may be the lowest price it has ever been, at least since last Black Friday. But it is not 150 quid saving. It's most a 25 quid saving. And that obviously lends you into that bit where people buying things because of the size of the discount as well. They think they're getting a bargain when they're really not. And that's where I think people have to be really, really careful here. You might be able to find the lowest price ever, but don't buy it just because the size of the discount or just because it is the lowest price ever. You've actually got to make sure it is something that you need and that you want.
Yeah, you have to go out there, don't you? You have to do your research. You can't just flippantly see a discount, as hard as it is, because we're all drawn in by the adverts and the advertising, aren't we? But you can't just be drawn in and flippantly buy something there and then. You have to do the research. You have to use those websites like, Price Runner, Price Spy, where you can compare the amount that product is being sold for at various different retailers, or obviously Camel as well. Check the product, the price history of a product as well. So actually you can work out, as you've just said there, Andy, actually it turns out that this was actually the same price that they're selling it for at Black Friday back in April, or it was even cheaper in April. So maybe if I hang on, they'll drop the price and it'll be cheaper again. So yeah, there are a few things that you really need to do, and just take a step back if you can, and really consider, do I need this right now? Because if you can wait, chances are you might be able to get an even better deal.
Yeah, and if you can't wait because you do need it right now, or it's a gift that you want to get hold of, just obviously we're only a month until Christmas, aren't we? As well, less than a month. But then maybe it's worth looking as well at any retailers that might price match. That's always a really handy aspect as well. John Lewis did bring theirs back this summer. It's not as good as it used to be, but could well be. If you buy something today, tomorrow, for a low price that is the lowest it is at John Lewis rather than another retailer with the same price, and again, there are other places that do something similar, if the price drops afterwards, then you might be able to get some more money back as well. And there are a few other retailers that are doing a price promise if they cut their own price as well. So Amazon and Argos are doing that. So again, there might be a way that you can, still take advantage of any extra discounts that might come in the next week or so. But again, that's not as good as it used to be, but it's definitely something to look at. Let's look at the next story now. And this is one that we've knew it was coming for a while, but finally was announced at the end of last week. This is around energy prices. They're going up again. What's happening here, Rob?
Yeah, we don't like to see this, do we? Yeah, so Ofgem, so they're the energy regulator, they've confirmed that energy bills for those on price cap tariffs, they're going to rise by around 1.2% on the 1st of January. Now, it equates to what doesn't sound like a huge rise. So it equates to about a £21 a year increase for a home using the average amount of energy, whatever the average amount of energy is, because obviously, we're all different, families are different sizes, we've got different people living in our houses, so it is difficult to say that. But yeah, it's not great news, is it? Because it feels like actually recently, and it always happens at this time of year, doesn't it, over the last couple of years, you get into the colder months, you get into autumn, winter, and you just expect the energy price cap is going to rise. And unfortunately, it doesn't come down as readily, does it? We know that.
No, I mean, this follows on from a kind of around 10% increase at the start of October. This increase will start from the 1st of January, and it's likely to be maybe another small increase from the 1st of April next year. So, prices going up again and again. They're not as high as they were when we were at the peak of that energy crisis, but they're still way, way, way over what we were paying 4 years ago, before the pandemic, before all the stuff that was going on in Ukraine and elsewhere that really ramped up those prices. We're still paying well over the odds, and it doesn't really look like it's going to be going back at all anywhere closer to where we are. So I suppose, what would you say that the top things people should be doing now if they are concerned about just how high their bills are at the moment?
It's not the sexiest thing in the world, but we would say, consider actually how energy efficient is your home. So actually we've got an energy efficiency tool on our website now where you can put in your postcode, and we'll use a load of data where we can try and work out actually, how energy efficient is your home? What improvements could you make? I mean, insulation isn't sexy, is it, Andy? But more often than not, it really, really does help to reduce those energy bills. I mean, in my own flat last year, or start of this year actually, we got some new double glazed windows, and I know obviously they are obviously quite a big outlay initially, but we've already noticed the difference this year. We have had the heating on significantly less since we got those. And I mean, there is a little bit of light at the end of the tunnel here where actually we can finally say that maybe fixing your
Yeah.
energy deal is now an option again, which is great. And we've not really had a lot of options around energy bills and energy pricing recently. So we have found, I think, around 5% you could save at the moment if you can try and fix with some of the suppliers. So that's 5% cheaper than if you just stayed on that standard variable rate, especially with the energy price cap coming up. So that is a little bit of good news. But yeah, I mean, as you said, I remember the good old days when, you know, your energy bills were much lower before all of the various sort of world events that we've seen and everything else. But yeah, it's not like that anymore. You've just got to be realistic. But finally, it is worth having a look if you are due to, you know, if your energy deal is coming to an end. Maybe I can fix, maybe I can save a bit of money.
Yeah, I remember when I used to tell people, yeah, you've got to go and make sure you switch and fix. You'd be saving 200-300 quid off your bills every year, which was, an amazing discount you're going to get. Sadly, if you are looking to get a fixed deal right now, you are not going to be talking about that amount of money again, despite the size of the how much larger bills are. The discount is going to be smaller, but I definitely think it's worth having a look because you're locked in. So if things do change and we do see another increase, because it could happen, like larger increases could happen. There's still a huge amount of uncertainty out there in the world. At least you're going to be paying something which is lower than the current price cap. Obviously, do make sure that the fixes you see are lower than the current price cap. And what I would also suggest people do is see if there are ones out there with no exit penalties, because then it gives you that freedom if the opposite happens and prices do start falling in April or perhaps more realistically next July, then you can jump off to another deal which might be cheaper still, or maybe another fixed deal that comes along, maybe a short-lived one which is a bit of sort of customer acquisition. We know that might be coming back now, a bit more competition in the market at some point next year could be happening. So it gives you that flexibility there. But yeah, definitely worth having a look at those different comparison sites. And also what I've started to see come back over the last few months are those kind of cashback incentives for when you switch as well. Not as big as they used to be, but maybe again, 20-30 quid, a little bit extra that you could be saving on top of getting a lower charges on your gas and electricity every single month. So from one fix to another, and this was an interesting story I wanted to chat about. This is a story I saw reported in This Is Money, and this is talking about Halifax and mortgages, and they have just launched an 18-month fix, which sounds strange to say. This is not happened before. This is a brand new type of product. Normally, the lowest fix you're going to get really is a 2-year fix. What's the thinking here from Halifax?
It's really interesting, isn't it, actually? And as you said there, crazy to think that we haven't necessarily seen something like this before.
Yeah.
Because, we see, don't we, the most popular for borrowers is that 2-year fix, because it gives you a bit of flexibility, obviously more flexibility than, say, a 3-year or a 5-year fix. But maybe then the rate that you can get is not quite as good if you were fixing for a bit longer. But I think that is the thought process here, isn't it, from Halifax? They're thinking, oh, well, this will look like a more attractive product, especially if you are, maybe starting your house buying journey, or maybe you're in that time of life where you're not sure what's going to come in the next few years. Maybe you're going to start expanding your family. You're going to want a bigger property. You're going to want to sell yours. You're going to, want to purchase something else, move away, something like that. So I can get it, as in I understand why they've done it. I get it. And it'll be really, really interesting to see, I suppose, what sort of rate you can get on it, but also how many people take it up.
Yeah, so at launch, it seems to be a rate of about 4.37% with a fee of £1,499. And it requires a 60% loan to value. So you need 40% of the equity of the property available to you. So again, this is not going to be for a huge number of people in this instance. But yeah, a sort of a different and interesting thing. And when you were saying there about people's, life choices, what's going on over the shorter period, this could be really handy, because what people forget a lot of the time is that when you're locked into a deal, if you want to move house or have to move house during that fix, then you'll have to pay an exit penalty or early redemption charge, which could be quite hefty, which is where those the 10-year fixes or even longer, which kind of been mooted in some places, they could be great in terms of getting you a lower rate, but you could be much, much more restrictive. So having 18 months could mean, okay, do you know what? Sort myself out for now, get myself off that variable rate tariff, which would be way, way more expensive, and potentially have that flexibility. Of course, I think a lot of people, they're going to be doing it because they're hoping that the base rate is going to drop and therefore mortgage rates will drop further, and that's still going to be a bit of a risk, isn't it?
Yeah, I think this is really interesting. I mean, personally for me, this is really interesting because actually we bought our flat that me and my wife were in. We bought that on it was January 2023. So what's that? I mean, coming up to 2 years ago
Yeah.
now. And at the time, that wasn't long after everything we saw with the mini
Yes.
budget. And at that point, variable rates were actually more attractive to us. And then we had all sorts of stuff going on, didn't we, with inflation, and the rates started rising again. So then we had to jump onto a fix about 6 months later, paying another load of
Yeah.
fees, as you said there, to try and get onto a slightly better rate. So, we're sat on a rate that is higher than would be ideal. So if we had been able to do something like fix for 18 months rather than, I mean, even fix for 2 years, which is what we did end up doing, we'd have been able to jump off that sooner and start looking at remortgaging. But it's really, really interesting. And ultimately, Andy, I know you'd agree with this as well. It does just come down to you have to do what's right for you at the time. We mentioned life circumstances. You do have to be sort of quite proactive and quite realistic and do your best to plan ahead for yourself personally. What are you going to be doing in the next year, 2 years, 3 years? What's your family going to look like? Is anything going to change? Because if you can fix for longer, as we know, 5 years, even 10 years in some instances, on our own money podcast, I'm pretty sure we were talking about a deal that one of the lenders was offering where you could fix for 20 years. I mean, I'm not saying we would necessarily recommend that, especially with hopefully interest rates starting to come down and therefore mortgage rates coming down. But there's all sorts of interesting things, aren't there, that the lenders are doing to try and win our custom back, which is good because obviously competition does mean that hopefully we can exploit that and get some better deals sometimes, doesn't it?
Yeah, absolutely. And you're bang on there about your own circumstances are going to be the real driver in here, what the right decision is. And that means that for a lot of people, it's talking to a mortgage broker, a mortgage advisor, and just trying to get a sense of what's out there in the whole of the market, weigh up all those different pros and cons that come with the different products. Because there are all sorts of things. Say you want to overpay your mortgage. Some of them will let you have an unlimited amount. Some of them have a small amount that you can do for a year. So there's a number of different things that you want to take into account, and they can help you in that conversation. But this is certainly something which I imagine will start being part of those conversations that the brokers do have with people.
I think they are. You mentioned them there, by the way. Mortgage brokers. I think they are some of the more undersung people, aren't they, out there in finance? Because I mean, ours was absolutely invaluable. The advice that they were able to offer. So if you find yourself a good one, they can be fantastic.
Right, let's go back to Which now, because there's another bit of research that you guys have been doing that I thought was really interesting. You were always very, very good on scams and campaigning against them. But this is some of the top scams of the year, specifically when it comes to home delivery scams, which are amongst the most prevalent. What have you found out?
Yeah, I mean, particularly prevalent at this time of year, as we know. Obviously, we've spoken about Black Friday. People will be getting deliveries to their door probably on a daily basis at this time of year, whether it's as I say, Black Friday, or once Black Friday's out the way in the run up to Christmas as well, of course, over the next few weeks. But yeah, unfortunately, we found actually that a lot of these delivery firms, the ones that you'll know, the well-known firms, they're now being impersonated by scammers. And what we'll see, and I'm sure many people will have had this, is you'll get a text message as you would do from one of these delivery firms. So that's not necessarily out of the ordinary at this point. But then what will happen is they will put a link in that text message. They'll say something like, "Oh, you missed your slot. Click this link and re-enter your card details to reconfirm your slot, or pay £5 to make sure that your item is re-delivered." Unfortunately, these are companies who are just fishing for our personal information, whether it's our personal details or indeed our payment information. And then obviously they'll take them and use them elsewhere, and potentially could end up taking money out of our bank account as a result. So yeah, there's a few that are being impersonated at the moment. I mean, we're seeing DHL, one of them, Amazon themselves, Royal Mail, Every, Impost. They're all the big brands, but those are the ones that unfortunately we're seeing being impersonated more than any other at the moment.
Yeah, and in this article is a case study that shared that which actually helped. Good news is helped get the money back, but it's staggering. One of these sort of this woman opened up a fake post office text, clicked on it, put their card number in, and ultimately £278,000 was stolen from a series of events just from initially putting in, clicking on that thing and putting the card number in. I mean, it really is staggering that can be happening from something that seems so innocuous.
100%. And you can see how easy it is to do it. You know, I think we see with scams generally now, don't we? I think previously there was always this idea or this kind of view of who the typical scam victim would be. That's not the case anymore because scammers are continuing to evolve. They're using new tactics. They're using artificial intelligence in
Yeah.
certain instances. You know, we've seen that online, haven't we, with deep fakes, especially around investment or get rich quick scams. You know, it seems like every week there's a new AI version of Elon Musk or a BBC news presenter who's offering to, you know, turn your £10 into £100,000 in a couple of months' time. It's terrifying what is possible now with technology. And I think with these delivery scams, I think they also are latching onto something that the scammers love to latch onto, which is a time of year when people are probably tired, they're stressed, they're very time precious. You know,
Yeah.
we're trying to fit in so many things into our lives at this time of year. You know, so you've got loads of social things on probably as well. So you can understand if you were a bit tired, a bit stressed. Maybe it's the day after your Christmas party and you're a bit hungover. You can see how easy it would be to just click the link because I don't know, you've ordered a gift for your wife or your girlfriend or your partner or your child or whoever it is. You know that you need to get it ASAP, and you click the link, you enter your payment details. Shock horror, it's a scam. So the only thing that we could say really is double check the official confirmation email you received from the retailer that you know you bought the product
Yeah.
from. That is the best way to track a delivery, and the only way that you can be sure that actually that link is legitimate and that information is real.
Yeah, you're right. I mean, they have improved so much. It used to be you could spot the typos and all those kind of things in there, but more often than that, not now. They look official. They look pretty good. You know, with phone numbers in particular, they can do things like spoofing, so it looks legitimate. There's so many of these tactics going on there, so you've just really got to be question everything, haven't you?
You
Have
do,
that kind
you
of
do.
bit of doubt.
Yeah, I mean, who obviously are one of the delivery firms. I mean, they say their advice is like the three L's. Those are the things you can look out for. I know you've said obviously a lot of these scammers have become a lot cleverer and the language is a lot better, but they're three L's that they say you should look out for. You've got language, so double check obviously for poor language or badly written messages. Lack of is the other L, so like no personal
Mm.
greeting, lack of personal information. That's quite a good one to remember. And also, we've already mentioned it, but links. So if there is a link in that text message, that is unusual. So before you click on it, double check rather. Is this a good thing to do? Probably not.
So let's move on to the last story now. And this is something which I've certainly spoken about a lot, and I know Which have as well. And this was an interesting find from the Competitions and Markets Authority, the CMA. You probably heard them referred to. And they've been looking at loyalty pricing. Now, you're all going to be familiar with this. This is your Nectar prices, your club card prices, basically the discounts you can only get in the supermarkets if you've got the loyalty card. And yeah, their findings have been, not quite what I would have expected.
No, not at all. So the Watchdog have said that supermarket loyalty cards do give genuine savings. Now, it's an interesting one, that isn't it? Because I mean, if you just do the maths, obviously,
Yeah.
you know, you just look at the prices in the supermarket. Yes, that loyalty price is cheaper than the regular price being offered. So yes, they do offer genuine savings, but it's that word genuine. Are they genuine? Because you know we've seen instances where at Which you know we've looked at the prices of products and we found that actually the price that you're being offered is not all as it seems. A little bit like the Black Friday investigation that we
Yeah.
were talking about a little bit earlier on. But also you have to think as well, what is the cost of all of this? And by that I mean, obviously, if we want to sign up to one of these loyalty schemes, we're handing over quite a lot of personal information. So you have to think about whether that's something you want to do, because obviously that information can then potentially be sold elsewhere as well. And what are these retailers doing with that info? They're building a profile of us, of course, we know that. But also, who is excluded from the loyalty pricing too? So, you know, if you are under 18, for example, some of these supermarkets won't let you get a loyalty card. If you have no fixed address, you won't be able to get a loyalty card. So that means that if you are homeless, for example, and at a vulnerable point in your life where arguably you've never need cheaper food than ever before, you can't get it. You will have to pay the higher price because through really no fault of your own, you're being excluded from being able to sign up for one of these loyalty schemes.
Yeah, it's interesting. It's going back to, as you say, to what is the real, the recommended retail price? What is the real selling price of something? And I think what's happened here is they've kind of, in the past, maybe the prices were a bit more leveled out. So they maybe were a bit lower, but continuously lower. So when there were offers and discounts, they maybe weren't quite as sizable. And what they've done now is maybe prices are maybe a fairer reflection. Potentially that could be what the CMA is saying here, a fairer reflection of what things could be sold for, but those discounts are deeper. So if the discount isn't on offer, and these prices can be temporary, they're not running all year round. It could be from time to time you're spending more because that discount isn't available to you, or as you say, you're ruled out of it because you're under 18, you don't have a fixed home address, or maybe you don't have a smartphone. A number of these schemes are kind of tied into you having a digital membership. So yeah, I think it's still be wary of these. My take on these: if you are going to a supermarket and you want to save money, you're going to need to take advantage of these schemes to get those lower prices. But don't just buy something because it looks like you're getting a massive discount. You're getting a price which they want to sell. They're not doing you a favor. They're trying to make you buy it. So really only buy it, again, similar to what we said at the top with Black Friday. Do you actually need it? Do you actually want it? Is there something else that's not on offer that could do the same job? You often get this in the supermarket, don't you? The same job at a lower price because it's not the big name brand, or it's a bigger pack, or maybe a smaller pack. But you do your due diligence, and that's probably a safer way than just assuming these prices are better for you.
Yeah, we've spoken to a load of experts as well who say, there are various things you can do, like look at the bottom shelf. For example, a lot of the way that these supermarkets are built, they have psychologists who come in and they place products in specific places because they know that's where you will probably look. They look at the average height of the average person that will go into the shop. So you put those premium products at eye level. You will put a product that you want to get rid of probably at the end of an aisle. And actually, if you go to, for example, the world food aisle, that's a good place to get a bargain. People often ignore the world food aisle, don't they? But you might get your tin of chickpeas there for half the price. You'll get your tin of chickpeas in the aisle that's got the soup and the beans and that kind of thing. So it is worth remembering a few of these different things. If you are doing an in-person shopping experience that mean that you can go and get a bit of a discount or have a shop that is a bit cheaper, or you can do what I do, which is religiously on a Sunday night, I sit down and I do my weekly food shop online, and then it gets delivered on Monday morning, and then I don't have I know basically that my willpower is not strong enough to avoid going to the supermarket and not, as you just mentioned there, Andy, buying things that I don't need. So if you have access to the internet and you are digitally savvy, then yeah, maybe hop online, and that's a way around some of this stuff.
Rob, thank you so much for joining us. Now, we'll link to all the stories that we have been talking about, including those witch investigations, in our show notes. But if people want to follow you and Witch, what are the best places for them to go?
Yeah, of course, we've got our website, so witch.co.uk, of course, and people know, of course, we've got the magazine as well. But then we've also got a load of podcasts too, which are really, really helpful. So they're free for anyone to listen to. So we've got our own money podcast, so that's money advice every single Friday. We've got another consumer investigations podcast called Get Answers. And yes, if you are not a Witch member, but you'd like to hear some of our brilliant journalism, then you can subscribe to the Witch Shorts podcast, where we'll bring you some of our best articles as well from our very suite of magazines too. So yes, and if you want to find me, I am at Rob Lilley-Jones on social media. That's Lily, Lilley, because no one can ever spell it properly.
Rob, thanks so much.
Thanks, Andy.
Okay, let's round out with our deals of the week. First of all, savings. The marketplace Raisin, where you can open up an account and then open up a number of different savings options at different providers from within it, have got a £100 bonus running for the next few days. Now, this won't be for everyone because you need to save at least £10,000 for 6 months. But if you do, that £100 bonus works out as the extra 1% over 12 months. Or if you do just a 6-month account, then that works out an extra 2%. Obviously, you won't get that for the whole year because you just have the money for 6 months. But still, that can be a big returns, well worth having a look at. The rates are changing regularly on this, and the link and the code you need in order to take advantage of this are all over at becleverwithyourcash.com/savings. Another savings deal to tell with you is another increase at the top of those cash ISA options. This is from Plum. They have increased their rate to 5.18% for new deposits. Transfers in gets a lower rate. And if you make more than 3 withdrawals in a year, you also get a lower rate. So it's limited access rather than easy access, but it's certainly worth a look. especially since Trading 212 are going to reduce their rate of interest from this weekend, although they do change their minds a lot on things, so you might find that they do try and combat against what Plum have done. But broadly speaking, new top of the table there, 5.18% from Plum. Now, what else to tell you about? Now, Black Friday coming up. One of the best ways you can take advantage of those deals is to use a cashback site. Over on our dedicated Black Friday deals page over at becleverwithyourcash.com, we'll be updating it with all the offers that come along. But the ones I really look out for are the extra bonuses and increased short-lived cashback rates on Quidco and Top Cashback. So I can't tell you about any of them now for Friday because they're not out yet. But on Thursday, we've seen things like 20% cashback at Liberty. We've seen £5 bonus on a £15 spend at eBay, £10 bonus on a £50 spend at the likes of Nike and stuff. These are all short-lived ones for a short amount of time, so do check out our list of those. But if you haven't actually already joined a cashback site, then it's well worth joining now because you can get a £30 bonus for signing up for Top Cashback via the link, again, over at becleverwithyourcash.com. If you haven't signed up to Quidco, then there's a £24 welcome offer. They are both much, much higher than the rates you'll see throughout the year. So you get that as well as these extra bonuses and flashback rates, as well as potentially some more cash back on top of that. So they are good ones to be looking at right now. Now, away from Black Friday, it is your last chance to get a year of Disney Plus Standard for just $49.99. To get this, you have to join up for Uber One. But once you've got that, then you can get the free Disney Plus for a year. But that ends on the 30th of November. So if you want to take advantage, you better act fast on that one. Looking ahead slightly, from Sunday, from the 1st of December, John Lewis is starting an Advent. So every single day up until Christmas Eve, there'll be some kind of discount or freebie. So worth signing to your My John Lewis account from Sunday and having a look at that. I wouldn't be surprised if more retailers do something similar. I'll tell you more about those ones next week when we know more about them. Also, a really good one here is from Odeon. If you are a fan of the cinema and you do go quite regularly, then you can get a year of the My Limitless reduced by 25%. So you pay 135 quid for 12 months of unlimited cinema. You get this via Amazon, one of their Black Friday deals. Again, more details on that and everything else over at becleverwithyourcash.com. That is it for this week's episode. Thank you so much for joining me. Thanks for Rob for joining as well. We'll be back with another episode on Tuesday morning on all podcasting apps. So we'll see you then. Cheers.